Well, this is fun. It's all right. Well, cool. Thank you, Ishmael. It's a great little conference here. I know how much work you guys put into it. The first round's always a lot of work, so thank you. Thank you to your team. So a little bit of a shift here. I think we've been talking and really kind of focusing on, I think, a lot of the higher level problems, right? Which is really kind of the trading, the data, all of that. I think that's actually what takes up a lot of the kind of conversation. But fundamentally, right now, one of the biggest issues with actually scaling trading activity in predictions is banking, capital movement, and actually post-execution settlement. So how do you actually start tapping into all these other different liquidity pools? So my name is Seni Thomas, CEO of Edge Markets. And like many companies currently in the space, we also transitioned from the gaming space. So we are the largest neobank in the US for gaming. So that basically means that we actually provide very, very high throughput consumer bank accounts. So you can actually walk around with our debit card, you can do $1 million at a casino, DraftKings, horse racing, etc. So what we found is that as we kind of look at these new kind of emerging industries, there's this huge amount of last mile friction in the banking system to actually be able to move money in and out. So like right now with Kalshi, you can only get $2,500 in. You have to pay 2% up front for retail. The back end is like a wire that takes 2 days to actually clear. It doesn't clear outside of banking hours, etc. So we've kind of really looking at it from the fundamental plumbing and kind of building up so that all of you guys can trade at a much higher efficiency. So we're going to walk through 4 things here. So first is the payment rails themselves. And we're basically building these multi-billion-dollar marketplaces on consumer-grade rails that were never designed for this purpose. And it's a huge cost both to the consumer, there's huge inefficiencies for the market makers, and then also in terms of the actual marketplaces themselves, especially the folks like DraftKings and stuff that are actually still eating the cost to do those deposits, it's a completely unsustainable business model. We'll also go into banking friction. So we're going to dig a little bit more into kind of building specific kind of entity bank accounts for traders to be able to do extremely high volumes in these spaces. People are getting debanked right now with all these state and federal lawsuits going on. Most banks are kind of pulling out of it. And then finally, we'll get into post-execution settlement. So the first 2 are really about how do you get retail money in, how do you get market maker kind of funds in 24/7. And then we're also going to talk about how do you actually scale trading activity, which is really the post-execution, the settlement, margin, and all the fun stuff that people like to talk about. And then finally, the data layer, which is actually what most of you in this room have been focused on. So that's something that we'd love to collaborate with you on as we kind of scale the whole ecosystem. So consumer payment rails. So this is even from sports betting, which is also a marketplace. We are basically running, again, these large marketplaces on rails that are extremely expensive. So every single time you want to use a debit card or PayPal or Venmo or whatever, on the sports betting side, they're actually eating anywhere from 2 to 4% of that transaction up front. So it's about 30% plus of their margin disappears immediately just on that deposit. And the issue, too, is churn. So now I'm prepaying for that deposit. Now if I want to pull that money out, move it somewhere else, move it back, I'm now paying for that same capital in over and over and over again. And with prediction markets and the actual marketplace model itself, where the margins are thinner, they're basically, it could be up to 60, 70% of their entire margin evaporates just on the churn and deposit costs. And this is why a lot of that is now being passed through to the retail consumer, which we really need to kind of bring that cost down or zero it out to be able to scale the retail side of this ecosystem. And finally, the thing with consumer rails that were kind of designed to do everything is like, you have chargebacks, like up to 90 days, people could literally deposit $100,000, lose it all on Kalshi, call Chase and be like, yeah, that wasn't me. And pretty much 9 out of 10 times, the banks will kind of side with the consumer. So these are not real kind of non-fungible, non-revocable deposits. So this is a huge institutional scaling issue. So we're kind of approaching this from a bit of a kind of a problem solution as we go through this presentation. And the first thing that we are launching for the entire ecosystem is we've actually launched basically a real-time payment layer called Edge Connect. So you can think of this like a PayPal, where you deposit into a bank account with us, You'd be able to go into the cashier at any of the large marketplaces. You'll be able to move money in and out in real time, completely for free, and incredibly low cost for the operator. And what this is kind of unique too with the whole ecosystem with predictions is that by the end of the year, we're probably going to have 6, 7, 8 different liquidity pools. And moving money from A to B to C right now is completely broken. You have dead capital sitting everywhere. You have to pre-fund all of your trades. And we need to make that much, much more efficient to grow overall trading volume. So this is basically a full end-to-end payment layer that's linked to the banking backend. You basically authenticate in, and we guarantee every single transaction for the marketplace. So a good use case, for example, is you'd be able to move $100,000 in. Immediately, you can log into another exchange, move that funds all in real time to be able to support your trading activity. So with Edge Connect, kind of the 3 primary things that we're really focused on solving is number one, the overall pricing model itself. As I mentioned, with the kind of the lower margins for marketplaces, is completely unsustainable at this stage. And there's a lot of venture money in there, et cetera, but in Polymarket, it's probably losing, it'll almost double the actual transaction costs just to the payment processing costs. So 3 things that we are doing here is number one is net new deposit pricing. So right now, with a consumer-grade payment rail, every single time I deposit that money, I'm basically being paid a tax. With net new pricing, we're cutting out Visa, we're cutting out all of the intermediaries. This is basically a direct integration with the marketplaces themselves. And by doing so, someone can now move $100 in and out 100 times, and we're only going to actually charge the marketplaces for net new capital in at the end of the day, which is how it should be, right? Unless the capital is actually in and actually creating kind of trading volume and revenue for the marketplace, they shouldn't be charged. This also eliminates things like the churn, and again, we also guarantee all of these transactions. So this is probably more relevant to a lot of the folks in the room here. So what we've also found and kind of expanded upon kind of our consumer banking is that we are also now approved by the banking regulators to open business bank accounts for traders. So this is a product that we called Edge Pro, and the debanking issues have been quite significant. We work with a lot of the top traders on Polymarket and Kalshi. Everyone sets up their companies as an LLC that's consulting or something else. Chase will go look through those transactions, and they're like, the only thing you've done here is move a couple $1 million in and out of prediction markets, not what we signed up for, get out of here. And this pressure right now is becoming more and more and more acute. We are seeing a lot of the states that are kind of in lawsuits right now with the major marketplaces are starting to squeeze and kind of lean on the state banking charters to have major banks actually categorize these types of transactions as high risk. And this is something, too, that we're right now, Kalshi represents about 90% of the market, so there's not too much of this kind of multi-marketplace money movement. But again, as we expand those liquidity pools and you start seeing more and more of these types of transactions on a traditional bank, it's going to get shut down. So we do provide full safe harbor banking now for professional traders as well as business entities that want to move into predictions. Also, we now have 24-hour markets that are basically limited by antiquated payment rails. You cannot get any money in on a Saturday morning if some trading activity spikes. So everything's right now is kind of based on wires and ACH, which is not as big of an issue right now. There's only one marketplace, but if you need to start moving money between multiple marketplaces, it's just not going to happen. It's a very, very clunky process today. And then the other thing too is, again, as we have these more kind of fragmented market moving forward, it's a huge burden as well for traders to have to go to every single marketplace, go seek the approvals, do the KYB and all of that. So we'll be able to centralize that as well. So with Edge Pro, there's really kind of 3 primary things that we're bringing to market here is the full entire banking infrastructure. We're backed by a company called Cross River Bank. They're the largest fintech bank in the US. They do not actually have retail locations. So due to that, we can provide full safe harbor banking where a lot of these issues around state charters and such don't apply to us. So we can actually provide these super high volume bank accounts for trading activity. So you'll be able to actually move $10 million per transaction, uncapped per day for free into any market. And it'll actually clear 24/7, nights, weekends, federal holidays. You'll be able to get your capital wherever you need it. And then finally, a centralized KYB. So we'll also be able to basically kind of offer you a one-time sign-up, and you'll have access to every single liquidity pool. And you don't have to maintain that. All of that's handled on our side. So now we kind of talked about how kind of the market makers get in money and retail gets in money. But how do we actually start getting institutional funds to scale into predictions? And there's some fundamental, completely broken issues to this that are holding this all back. And number one is pre-funding trades. I mean, nobody trades like this. Like, there's no other marketplace right now where I have to go and deposit, multi-million dollars in multiple locations just so that maybe I can trade it, right? So it's dead capital. It's not being utilized. But also, I have to take it out of my prime brokerage. I'm losing my leverage on that side as well. So it's extremely expensive capital. And then also the fragmentation. And I think something that is not talked about a lot when we do all these comparisons with financial markets is that, if I want to buy Microsoft shares, I have to go to the NASDAQ. That's unique inventory that's listed on that marketplace. That is not the case when we're looking at different liquidity pools and marketplaces in predictions. These are all effectively commodity contracts that are very similarly defined across multiple locations. And due to that fragmentation, again, you need to be able to move money kind of between all of these places to be able to kind of scale up your trading activity. And a lot of the folks that we're working with now are doing kind of the arbitrage between these between the marketplaces. And that's something that's very, very scalable, very profitable. And then finally, how do we bring margin? Because right now, what's happening with this fragmentation is if we do end up with 6 different marketplaces by the end of the year, if I have $100 million in my prime brokerage, I'm getting 10x leverage there. I have basically $1 billion of trading capital for equities, FX, whatever else I'm trading. You are now asking me to pull out $10 million bucks, pre-fund $2 million in 5 different accounts so that maybe I will be able to trade on those marketplaces. So effectively, I'm giving up $100 million, or $90 million of overall kind of capital access that I was already trading across other marketplaces. That's just never going to happen. So again, these are these fundamental kind of building blocks here and broken plumbing that we need to solve to be able to bring real institutional scaling into predictions. So the way that we're solving this is that we actually are launching our own FCM. As a bank, we already kind of check all the boxes of being able to custody funds, segregate that, et cetera. But there's a lot of power that we kind of bring to the table by having kind of the banking infrastructure plus our own FCM as also a neutral party, right? We don't have our own marketplace. We don't clear. We kind of are a neutral party where we really want to be the best place for traders to bank and move their money. And we'll be able to facilitate all the execution and the order flow, everything through the FCM. And the key to this is, again, the post-execution settlement, which is how every other type of trading works. So you'll actually be able to, through us, trade across 6, 7 different liquidity pools. We guarantee the funds because they're at our bank. And then after the fact, the following day, we then settle up with all the marketplaces. So it is basically, it's one-to-one, right? So every single dollar of capital that you have to trade is only ever going to get moved once for a trade that's actually occurred versus having to pre-fund and let it sit. So this is one part that we're very, very excited about, and this should dramatically increase overall trading activity. Centralized trading accounts, again, the kind of the KYB and all that stuff that we talked about makes it much easier. We have a single API data feed where we'll be able to aggregate everything, and then you'll be able to execute through that as well. And plug and play margin, right? So like for us, we're not reinventing the wheel here. There's already specific kind of ways that you move capital and finance, or specific ways that you want to do the settlement and kind of top it up and margin and everything else. But we kind of need to build that first link and kind of the plumbing here to be able to bring institutional level kind of trading into predictions. And so for us, we don't really want to play the margin game. That's not for us. There's lots smarter people out there who can kind of analyze that risk. But you will be able to plug and play through an FCM. So basically, if you do have that $100 million account with the 10x leverage sitting, somewhere else at Hidden Road or some other prime brokerage, it's a simple integration for us to understand what your balance is. You'll be able to fully leverage all of that trading capital into predictions, just like you're checking a box like any other marketplace. And so what's happening now too is that you do have the Kalshis and the poly markets and stuff are also trying to spin up an FCM exactly for this purpose, right? So that you can actually bring margin in. However, they are effectively now limited to only their inventory. So by us kind of being a neutral party here, again, we're the Switzerland. We just want to be kind of providing the best services for traders and folks like you to be able to move that money. And like you'll never be able to, for example, buy a polymarket contracts through like Kalshi FCM, right? And then it's very, very complicated to be able to kind of do multiple FCM accounts. So this is actually kind of more, I would say, a collaborative component, but I think a lot of the presentations that we've seen here, the guys at Delphi do a fantastic job at this layer on the top end, but it's all the stuff that you guys are doing today in terms of kind of building those interfaces, kind of normalizing that data, being able to kind of now trade across all these different locations. And there are nuances, right, to every single marketplace. There's speed bumps, the definition of the contracts might be a little bit different, but these are all huge opportunities if you're a smart trader, being able to trade at very high volume and very low friction across different pools. So then anyways, I couldn't resist this one, but the one more thing for us today is that basically we're offering everything for free. So Edge Pro is a completely free banking backend. We don't charge any fees. You'll be able to move money in real time into any one of these locations, as long as you're approved for wires by the marketplace. And then also for some of the marketplaces, we chatted with the guys over at Predict, but we'll provide all the retail deposits completely for free as well for the foreseeable future. Eventually we may monetize it through commissions and such, but these is really the fundamental issues right now that we need to solve for predictions to be able to scale the entire ecosystem. You can't get money in and out, there is nothing. And this is the number one kind of, I would say, moat and defensibility that we want to build for the ecosystem, as well as a lot of the kind of legislation and these lawsuits kind of work their way through the system. So anyways, that's it for us. So thank you so much, but I would love to open up for questions. Cool. All right, guys. Well, thank you so much. Cheers.